Hello, everybody. Welcome to the Anomaly course, Core Content Lesson 5, Equilibrium and Validations. So firstly, let's go over how to mark out our equilibrium and validations for a reversal candle. So once you have your C2 candle, in this case, a bullish one, we mark out the entire wick, and the upper half is going to be our invalidation level. And for a bearish C2 candle, we're going to mark out the upper wick, and the lower half is going to be our invalidation level. Now, when you have a continuation candle closure, you're going to mark out that entire candle's range. And for a bearish scenario, we're looking for the lower half to be respected for our validation level. And for a bullish example, we're going to mark out that whole entire range again, but we're looking for the upper half to be respected for our invalidation level. Now, when putting that all together, this is what it should look like. Here is a bearish C2 candle. So what do? Mark out the entire wick. What do we want to see? The upper half be respected for C3 higher. Because what do we want to trade? Expansion candles, right? What do expansion candles have in common? That small wick. So this essentially forces us to basically create a small wick and trade that expansion candle. It's like a filter in price that we can use, right? If we come over here and disrespect EQ, what is that doing? That's creating a large wick or a reversal candle, which we do not want to trade. This is a way we set invalidations to that idea. So here we see a C3 expansion closing above C2 candles high, which validates us to trade C4, right? We want C4's low to be respected in the upper half of that previous candle's range because we close a bullish expansion candle. So what are we going to do? We're going to mark out the entire range. So here we are with a real chart example. Let's go ahead and mark our invalidations. So here, as we can see, we trade into a key level. That's what we want to see. Then we want to see a reversal off of it, right? C2 candle, reversal, showing that bearish intent to go lower. What is the candle mostly made out of? Wick, right? So we're going to mark out this entire wick, just like so, as you can see. And where is C3 positioning its high in? The lower half of that area, right? How does C3 close? Well, as you can see, we close below C2's low. So what can we trade? We can look for C4 continuations, right? Where do we want C4's high to be created from? Is that lower half of C3's range. We're going to mark out the entire body because it closes more of an expansion candle. So now we're going to go over the phases of a candle. And there are two phases in a candle. That is the protraction phase, which is the open low of a candle. And the expansion phase is the high and the close. This is simply candle profiling, but we can essentially anticipate where the protraction phase or the wick should form, right? And that is in the upper half of our validation level, this gray area here, right? This is an expansion candle, so you mark out the entire range. That gray area or the upper half is our invalidation level, but this is a very large area, right, to look for, confirmations in. So what we're going to do is we're actually going to look within this gray area for a refined key level. Let's go see what that looks like. So here we are with our first refined key level being a fair value gap. So what we're going to do is we're going to go on the aligned timeframes. Here are the aligned timeframes. When you have an expansion candle, you mark out your equilibrium, right? If that is a weekly higher time frame candle, you're going to look for a daily gap within that upper half or this gray area, right? That is where we want to see the protraction phase of this next candle to form its wick from, right? If it is a daily higher time frame candle, then we want to look for a 4-hour gap. So on and so forth, right? 4-hour higher time frame candle, look within the 1 hour slash 30 minute for a fair value gap for your refined key level. So as you can see, price will open low, creating the protraction phase or the wick inside of that gray area or that invalidation level, but we're taking it one step further, right? We're looking for a key level within that area. What do we have right here? Boom, key level. Once we hit this key level, this is where you want to look for confirmation to confirm the low of that higher time frame candle so that we can catch the expansion, right? What do we have right here? C2 candle. So what should happen, right? The low of that higher time frame candle or the protraction phase should be set. Now we can trade the expansion phase, right? This is what we are after. This is what we want to be trading, is higher time frame expansion candles. So now let's go over highs and lows as our invalidation levels. So same thing, right? Looking at our invalidation level just in the form of premium and discount, right? This is the premium end of the previous higher time frame candle. We're going to take that one step further by looking for a key level within that area. And here you can see we have a low. This low will be our refined key level. And here are the alignments, right? If you have a weekly higher time frame candle, look on the 4-hour. If you have a daily, look on the hourly, so on and so forth. But once price opens low, that protraction phase, open low into the key level, we're going to be looking for confirmations, right? Here's your C2 confirmations on the lower time frame. Once you have that confirmation, we should anticipate the protraction phase to be over and the expansion phase should follow. So here we are on the daily, guys. What do we see? Price trading to a low, prints a C2 candle. So when we have a C2 candle like this, where it closes near its own high, we are not going to mark out the wick like this, right? This is actually closing more of an expansion candle because it's closing near its own high. So we're going to mark out the entire candle, and we're going to look for invalidation level in the upper half, right? So in this example, we're going to be using a gap as our invalidation level. So this is the daily. So what is the alignment? We go to the 4-hour. So now let's drop down to the 4-hour chart and look for our refined key level. So here we are on the 4-hour time frame. And as you can see, let's mark out that daily open. So here is the daily open. We're really looking for a key level above this black line. So from black line to the opening price, really, do we see anything up in here? Well, I sure do, right? This 4-hour gap, this is exactly where we want to form the low of the day from, right? This is the only key level, right? There's really no reason to go beyond this level. So anything below this gap is irrelevant, right? I don't want price to come down here, nowhere. This gap is our refined key level. It's no longer the entire 50% of the previous candle's range. We now refine it to this little gray area, this little blue area. That's it, guys. So once we hit that, that's where we want to look for confirmations to end the protraction phase and begin that expansion phase, which is what we want to catch. So now let's go over an example where we're going to use a higher low as our invalidation point. And this is a little bit of a weird one, right? So here we are on the daily chart. We trade into a low. We have this weird closure where it has a small wick. So it's like a reversal to expansion candle, but then we kind of close back in the range. So here you cannot mark out the entire range, right? You can't mark out this entire range because we're closing below it, right? How can this be your invalidation point? So you also can't mark out the wick either. It's way too small, right? So in this case, this is why I showed this example. This is when you're going to mark out from the close to the open, right? So this area from the close to the 50% is your invalidation level. So I thought this was a cool example to show you guys every single scenario, how to mark out invalidation levels. So this is how you're going to do that here, right? So let's go look for a swing low on the hourly chart, right? Because that is the alignment for the daily. We go to the hourly. So here we are on the hourly time frame. And what do we want to look for? Is a swing low above this line, essentially. That's it, right? So what do we see? A swing low above that line. This is our invalidation level, right? When price trades this level, this is where you want to look for reversal confirmations to trade to the upside, right? This is where you want that protraction phase of the candle to end, to form its wick, and then to expand away, forming the expansion phase, which is what we want to catch, right?